ACC posted its Q2 calendar year 2022 results, and the results barring sales were weak as expected. On the back of good demand, the sales did see an up move of around 15%, but at the same time we did see a dip into the margins as expected. From 22% to 9% is what the company posted its margins, and our expectations were somewhere around 10.5%. At the same time, the profit also did see a decline of around 60%. The figure came out to around 227 crore from 569 crore in the last year. So clearly the profits did tank, the margins also tanked. However, sales, we were expecting that there will be an up move, which we did see. At the same time, the cement volumes rose by 10.5% on a year-on-year basis. However, blended realizations were also up 4% on a year-on-year basis and 2.8% on a Q-on-Q basis. Blended EBITDA per ton, if we have a look at it, it was around 563 rupees, and at the same time raw material cost per ton. Of course, cement companies are constantly facing a hit due to the cost pressures which they do see. Raw material cost per ton increased 51% on a year-on-year basis. However, it decreased 5.2% on a Q-on-Q basis, and other expenses did see a declining trend as well. So this is something to watch out for. At the same time, power and fuel cost per ton increased 43% on a year-on-year basis, and it did increase 29% on a quarter-on-quarter basis. And fuel cost also, freight cost also did increase 6% on a Y-on-Y basis. So clear indications that the costs are still a concern for cement companies and particularly for ACC as well. Overall operating profits declined by 51% on a year-on-year basis to 425 crores, and lower operating profit along with higher depreciation was one big reason why we did see profits tank down during the quarter at around 60%. So 222 crores was the figure of profits which the company, 227 crore was the figure of the profits which company did post. So clearly a weak set of numbers barring sales as expected for ACC.